Cost, volume, profit, cost, volume, and profit analysis. Volume means quantity, and profit means cost minus sell minus cost. Ultimately, we will get profit. So, how much cost or how much sell since the profit. Sales increase, profit increase. Sales increase and cost decrease, profit will increase. So there is a relationship. This relationship is called cost volume profit analysis. To be cost volume profit analysis, there are some criteria, assumption, limitation. First criteria, the behavior of total cost and total revenue is linear over the relevant range. Linear means the relationship, and one is depend on another, and a consequence relationship indicate this linear. So the behavior of total cost, total revenue is linear. That's mean total revenue increase and total cost also increase. The difference between cost and revenue, you will get a profit. This relationship is called a linear relationship. And another criteria, costs are linear into variable and fixed cost element. Variable cost and fixed cost are the linear. That means variable cost or total level of activity are changeable, and fixed cost, total level of cost are fixed or constant. This one is another is a vice versa or opposite. This relationship also calls a linear. And another criteria, total cost remain constant. Total fixed cost remain constant over 11 volume range of CVP analysis. In CVP analysis, consider the total cost will be constant. And another criteria, total variable costs are directly proportionate to the volume over the relevant range. That's mean total variable costs are changeable on the basis of a proportion. That is also linear. Selling price has to be unchanged. Selling price are considered here is unchanged, no sales. In multiple product companies, the sale mix are constant. Multiple or variation of the product or group of industries consider here are constant sale mix. Every item are sold at constant or equivalent. Consider in the CVP analysis. The number of unit produced equal the number of units sold. It is also another constant for CVP analysis. Here indicate the produce of product all are sold. There is no chance to remain on hand. Closing stock are not on hand. That is considered in this CVP analysis. So it is another kind of constraint. So this limitation, assumption, or criteria are basic or core function of the CVP analysis. Now I am going to Another option, the break-even point. You know that break-even point means a balance figure. Break-even point is a point, the neutral position. There is no profit, there is no loss. That's mean total revenue is equal to total cost. This is equal balance. This equal balance is called break-even point. Another slide try to clearly shows the CVP analysis and break-even point by a diagram. There are vertical and horizontal axis. Left hand side as break-even point in sales, and horizontal or bottom line break-even point in unit. This is the unit area. This is the sales area. So when I try to sell, revenue will come. This revenue origin from the corner, and the increasing sale, the line is also increasing to the upper line. So in this way, the line are continue, and there is a fixed cost, this dot fixed cost, and then variable cost. Variable cost are changeable. Gradually, our cost are increase. The line also gradually increase. This is the variable cost. On a point, variable cost and revenue line are intercept. This intercept point is called a break-even point. That's mean this is a neutral position, no balance, the balance position, no profit, no loss. This condition is called a break-even point. So I am going to another diagram and broadly discuss here the break-even point or CVP analysis diagram. Same before the chart, horizontal and vertical axis, and revenue line or sales line, then fixed cost or fixed, no sense, variable costs are variable, then intercept in a point, a break-even point, and after break-even point is a strong zone, that's profit, and before break-even point is a loss zone. Okay, so this is a clear chart or diagram of break-even point analysis. This is the another slide. There are two keywords are difference here: CVP and ABC. CVP means cost volume profit analysis. ABC means activity based costing. CVP analysis are analyze profit, loss, sales with it volume. How much sales lead to the profit? How much loss are lead to the loss? So this relationship is indicated by CVP analysis. And another option A, B, C, that's been activity based costing. It is the part of the cost driver. That's mean when the activities or categorize the materials, valuable materials, you have to consider a category on, and less valuable than category A, you have to indicate by B and then C. In this way, you just try to a symbol or try to a signal or try to a serial number. This technique is called the ABC technique. It is a material purpose ABC costing technique, and production based or function based. There are ABC technique. In this situation, ABC techniques are how much set of activities function lead to total cost. So element or component increase, cost increase. Component or element decrease, cost decrease. This allocation or technique is called ABC technique. Another cost behavior. CVP analysis assume that cost behave linearly. Linearly means there is a specific pattern for variable cost. There are a specific pattern for fixed cost. There are a specific pattern for sales revenue. This specific pattern is the called a linear relationship. One is are different on others. ABC takes more nuanced approaches, recognizing that some costs may not vary in linear manner. That's mean here the costs are vary, but no follow the linear. Linear means a consequence. In this way, you just try to read the difference between CVP and ABC costing techniques. Now I am going to another slide. The mathematical problems. CVP analyzes the mathematical problems. To solve the mathematical problems, you have to some formula memorize. Otherwise, you cannot solve this mathematical problem. But in the solution pattern, in the solution place, there are clearly mentioned the formula. There is no a separately formula. Okay, so I just try to highlight the formula in the place of solution. Okay, this is the math. Volta company manufacturing and sells a specialized cordless telephone for high electromagnetic radiation environment. The company's contribution format income statement or most recent year is given below. So there is a statement sales. This is a particular first column, second column total, third column per unit, last column percentage. First column sales, then variable expense, then fixed expense, then net operating income. This consequence figure or this consequence pattern of cost is called a cost format income statement. Contribution format of income statement. This chart or this consequence you can call format of income statement and required number one, compute the company's CM ratio and variable expense ratio.
স্যার স্যার যদি বাংলা আর ইংরেজি মিলিয়ে বলতেন একটু ভালো হতো আর কি। ইংরেজিতে বললে সব ভুলে যাই।